Hello everyone, welcome back. Most of you may have heard or read the news about the recent collaboration between Facebook and Reliance, where Facebook bought around 10% stake in Reliance Jio for Rs 43,574 crores. That's approximately $5.7 billion. dollars. So it's considered the largest foreign direct investment in India. If you have to do a simple Google search about Facebook and Jio, we will come across multiple articles where the economists are discussing the investment and how this partnership can shape digital India's future. I have provided few links in the description in case you want to read them. In this video, we are going to discuss what the deal is between Facebook and Reliance, why Reliance needs this fund, and what is the purpose of this deal, what made Facebook invest into Reliance and into the Indian market, and what can be the possible outcomes from this particular deal. So make sure you watch the entire video to understand the overall case study. So with that said, let's get into it. So the first point is what exactly the deal is. Facebook has invested $5.7 billion and has acquired around 10%. And just to clarify, when Facebook has acquired this percentage of share, it is not the public share of Reliance which you and I can buy in the stock exchange. It is not that Reliance has taken a certain number of shares back and provided it to Facebook. On the National Stock Exchange, what we see and trade is Reliance Industries Limited (RIL). Reliance Jio is a telecom wing, and it itself is a company called Jio Platforms Limited. So Jio is a subsidiary of Reliance Industries. Jio Platform is not a listed company and is fully owned by Reliance Industries. Another subsidiary company of Reliance Industries is Reliance Retail Limited. So Facebook has invested in Jio Platforms. Since Jio Platform is owned by Reliance Industries, all the benefits of the investment go to the parent company as well. Moving on to the second point, why did Reliance go for such a partnership? Economists say there are multiple reasons for this particular deal. One of the reasons for this deal is that Jio Platform has a lot of debt and loans. Economic Times have reported that Jio has a total debt of roughly 40,000 crores. This deal is a full cash deal, so the investment may be used to pay off Jio's platform debt. Another reason is that Reliance has an ambitious business plan towards digital India. Mukesh Ambani, in his press release, has spoken about his intention to make India digital. Reliance is already planning on starting an e-com business with small and medium entrepreneurs, groceries, and kirana shops to develop a platform for these businesses and to connect customers and retail shops through this particular online platform. In India, there are so many groceries and kirana shops. These shops cater to the neighborhood and don't have a medium or platform to sell their items online. This is a major gap which Reliance is trying to take advantage of. Something similar to Zomato or Swiggy, which has connected restaurants to customers. So, in the same way, Reliance is developing a platform which can connect groceries or kirana shops to retailers and to the customers. This business has potential to earn huge transaction revenue going by the number of shops and retailers and the number of customers that we have. Reliance also wants to connect GeoMart with a platform like WhatsApp, which is widely used by everyone in India. This will make communication and payment structure much more seamless. To execute these plans, they would need to partner with someone strong in the e-commerce business. So this way, a company like Reliance will be able to use and leverage WhatsApp. Next, moving on to the next point. Why did Facebook take this deal and invest in Reliance and in India? In Facebook's recent press release, Mark Zuckerberg actually mentioned that this is an opportunity to grow the e-commerce business in India. Facebook generates about 98.5% of their revenue through advertisements. So if they're able to tap into a bigger crowd, this would be an opportunity for them to increase their revenue. Not just that, Facebook also wants to expand their payment and transactional revenue model. So this can be a great opportunity for them. So if they are able to use Jio's existing customer base, they can tap and grow the transactional business model of Facebook in India. Jio has a strong customer base right now, and Facebook has a lot of information and database. Together, they can use this information and to understand and track the customer's behavior. They can understand the consumer needs and requirements in the retail market. So this clearly shows the potential India has towards becoming digital and in the years to come. And why Facebook has chosen to collaborate with Reliance is because Reliance has opened and dominated multiple new ventures. A new company like Jio, which started a few years ago, is currently one of the biggest telecom companies in India and the third largest network operator in the world. Jio has about 370 million users as of 2019, which is about 37 crore users. Moving on to the possible outcomes from this particular deal. One major disadvantage could be the possibility of no net neutrality. Net neutrality simply means that an internet company has to treat all websites and platforms equally. So, the possibility of no net neutrality means that a telecom company may prefer a certain web page. So, it is possible that if you have geo connection, you may be able to surf Facebook much faster as compared to surfing on Facebook using an Airtel or a Vodafone connection. Second, aiming towards a larger market share. Before Jio, there were multiple telecom companies in the Indian market. With all the price wars by Jio, the Indian market has become a duopoly where the market share is shared by two service providers, Jio and Airtel. So this can be another step to capture more of the market share. And third, as I previously mentioned, a major advantage of this particular partnership is that it enables Reliance to partner with small and medium sized businesses and kirana shops instead of competing with them. So, this is more of a win win situation for both the sides. Before we finish off, it is important to understand the impact of this investment has on the stock market. On the day this news was announced, Reliance stock went up, so did Nifty and Sensex. There was a gap up that day. The share price of the company was trending about 1150 to 1200, and since 22nd April, the share price has seen a bullish or an upward curve and currently is trending in a price range of 1450. So, considering Reliance is one of the biggest companies in India, growth in this company will help the overall Indian economy as well. So overall, we can predict that geo platforms have great potential ahead, and there are a lot of opportunities as well. Economists also predict that geo platforms could go public in the next 2 to 3 years. So all these investments and partnerships can be a path for planning towards geo's IPO in future. So I do hope I was able to explain the partnership deal between Facebook and Reliance. If you found this content useful, make sure that you like it and subscribe. Also, if you're interested in learning how to trade in the stock market, I have mentioned a few websites where you can actually learn how to paper trade for free. Or if you want to understand how you should invest your time and money during this initial recession phase, I've created a video for that as well. So, with that said, you guys, thank you for watching this. I really appreciate it. So, stay safe, stay healthy, and see you all in the next video.